Hi everyone and welcome to Learning with GP, where learning is simplified. In today's video, we are going to work and build up on our personal accounting vocabulary so that the next time we are in a class, conversation, or simply reading some financial piece, we feel like a pro. I am going to cover all your basics such as liability, equity, accrual basis, etc. etc. Let me know in the comments if there are any terms that you don't understand and I haven't covered in this video, and I will add them in later videos. So without further ado, let's get started. First, we will quickly understand what is accounting. Accounting is basically a way to identify, quantify, and communicate the financials of a company, so that the people involved can make best possible and informed decisions. There are two common types of accounting. One is financial accounting and the other one will be management accounting. To learn more about different types of accounting, check out my upcoming videos. Financial accounting is the type of accounting which tracks and records for all sorts of financial transactions that occur in the company. They are actual day-by-day record of the company's dealings. These are recorded so that they satisfy all the regulatory requirements and provide the information required by the users. Then we have management accounting. This one, as the name clarifies, is more relevant to the management board of the company so that they can effectively execute all those planning, forecasting, budgeting, etc. tasks. There are many different ways of performing accounting, and the two most popular ways of doing it includes first, accrual accounting, and second, cash accounting. Accrual accounting. This type of accounting records the expenses and payments of a company as they occur, rather than waiting for the actual cash payment to take place. So for example, let's say you own a computer shop and you sold a laptop to your best friend today. And as he is your best friend, you give him a pass and he pays you back in a month. Now in accrual accounting, you will record this economic event in today's date and not when you receive the cash payment, that is, in a month. If you want to find out whether or not a company performs accrual accounting, you can do so by checking for the presence of info on accounts payable and accounts receivables in the balance sheet. Accounts payables refer to the money owed by the company to the vendors, whereas accounts receivables means the amounts owed by the clients for a service, etc. to the company. And as previously discussed, accrual accounting is based on the economic events and not the actual cash outflow or inflow. So these terms are present in accrual accounting system to highlight that. Accrual accounting gives you the current picture of the company and also allows to get a view of the future to make plans and strategy accordingly. It's considered a more accurate form of accounting than other methods. However, as accrual form of accounting is solely based on the economic events rather than present cash, it could act as a slight disadvantage. For instance, it could create a risk of circumstance where the lack of cash in short-term period could be overlooked. In other words, say you made a deal today, which looks like you have great prospects, which you do whenever you receive that deal money. But as you didn't necessarily receive any money today, in case you were suffering from the lack of cash, you might still be in deep water, despite of the deal cracked today. So it's good to be wary of it, if that makes sense. But overall, accrual accounting is a great way to have an overall realistic picture of the company's status. Okay, now let's take a look at cash accounting. Cash accounting is basically the type of accounting where the records are created post-inflow or outflow of the cash. If we go back to our previous example of selling the laptop to a friend, we sold the laptop today and will receive the payment in a month in the future. So we will find that cash accounting will only record this deal 1 month later when the cash was actually received, in contrast to accrual accounting where it was recorded in today's date. I hope this clarifies both the types of accounting even better for you. So in a way, even if your company has secured a major deal of 100 million euros, this type of accounting won't change anything in your financial statement until you actually receive the cash in the company's account. This can be a bit ambiguous to ascertain the actual status of the company. Therefore, there is a requirement of having an accrual accounting for most bigger companies by the financial institutes. Keeping accrual accounting can be complicated and expensive. So smaller companies are provided the option to decide whether to keep it or not. However, after crossing the threshold revenue as set by your country or state guidelines, they will also have to maintain the accrual accounting. So that will cover it for today. In the next video, we will talk about some other important terms for your accounting vocabulary, so stay tuned. Thank you so much for building your accounting vocabulary with me. It's really fun for me to put this together. If you have any questions, other terms, or want further clarification on any of the points, let me know in the comments below. Don't forget to share it with someone whom you think can benefit and learn from it. Do subscribe to my channel. We have a ton of learning material here for you. And give me a like. So see you until next time. Bye!